Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it's been a day of volatile trading with the bulls and bears jostling for the upper hand, but it seems like ultimately it's the bears who are going to win the day. The nifty and the sensex, of course, are considerably off today's low after falling almost a percentage point earlier in the session, but it is the mid and small cap space that are clearly winning the battle against the bears. The mid and small cap indices were largely trading in the green territory as compared to the large cap peers who were taking it on the chin this afternoon. Also in the rupee market, you saw a decent level of weakness against the US dollar, despite the fact that there were hints from dealers that RBI was intervening to stem the loss, but still it seems like rupee is also going to close weaker against the US dollar. Also other stocks that were buzzing, JP Associates, Dalmia Bharat, were buzzing in trade on possible rumors of a likely asset sale. So two stocks really to watch, keep an eye out on, especially in terms of JP Associates, given the fact that an asset sale on from their end could actually result in quite an upswing on the stock going ahead, Santo.
Well, yes, the broader trend, although CJ, I would say that notwithstanding today's correction, still remains, I would say, slightly biased towards the upside. But at the same time, CJ, I think the bulls might be getting a little complacent if the market keeps steadily inching up. That usually tends to make traders take more risk after a certain point of time, and I think we could see that come into play as well. A quick look at the FNOQs. We're seeing some long build up in the futures of Interglobe Aviation and Polycab, and we've been seeing some short covering in PNB futures. So probably that could explain the recent enthusiasm in the stock.
Absolutely.
Also, we are seeing a short build up in Metropolis. Now, Metropolis Healthcare, no respite for that stock really. In fact, market has broadly been bearish on diagnostic space for most of 2022, and the latest numbers also doesn't seem to inspire much hope. So probably we could see that trend continuing for some more time. Navin Fluorine is the other futures in which short positions are being built up.
Very interesting names there, Santo, from the FNOQs, and thank you so much for that. Moving on to the stocks that were buzzing in our radar today in the session, and starting off with the first one being a very unique name from
Borosil Renewables. Now the stock had a very subdued second quarter performance. In fact, volumes fell quite sharply. What probably saved the company's top line to some extent was that realizations were slightly higher, so that partly compensated for it. But the big problem for Borosil Renewables, now Borosil Renewables is the largest solar glass manufacturer in the country. The big problem at this point in time for Borosil mainly is that increased competition from Chinese and Malaysian players. Now, for a while, Borosil also did well. In fact, the last 2 years have been quite good, and one of the key reasons was that there was this anti-dumping duty on solar glass imported from China. Now, that has expired in August 2022, and that has not been renewed. So, there's pressure clearly from there. Also, a lot of Malaysian players have once again now started shifting their base back to China. So at this point, more than anything else, yes, the renewable energy story looks pretty intact and pretty positive, but in the near term, I think that is the big concern for a company like Borosil Renewables, and you're seeing that in the share price performance as well. For the last many months now, the stock has been struggling to break past 450 rupees, although the top line for the second quarter was slightly better, but overall the larger concerns as far as the competitive intensity is continued, that continues to persist, and probably that could keep the stock under pressure in the short term.
Well, Santo, I think clearly in the near term there are a lot of question marks as far as Borosil Renewables is concerned. Competitive intensity has been high, margins have taken a beating largely because of higher fuel cost as well as some input cost as well for the company. But I think if you look at it from a longer term perspective, the solar glass story remains quite a strong narrative, not only globally but in India more specifically, because here in the government clearly is focusing towards shifting a lot of the non-renewable energy sources to renewable energy sources. Big groups such as RIL, Adani Group and all have been investing quite heavily in the solar energy space, and given such a big tailwind coming from domestic market itself, I think being the largest solar glass manufacturer, and I think Borosil clearly finds itself in a very unique position to benefit quite richly and quite highly from this situation. I think going ahead, the demand scenario will remain quite feasible and quite attractive for investors. It is just that the near-term, effects on the margin as well as realization. I think that's where if the company can, skip past those problems, then you could see, the re-rating story again coming back for Borosil Renewables as we had seen back in 2020 and 2021. The other thing is that the company recently has made an acquisition in Europe. They have acquired Interfloat, about 86% stake in Interfloat in Europe, and this is something that will also, going forward, enhance the revenue outlook for the company, because this is also a large solar glass manufacturer in Europe. So clearly, not only it provides a good outlook for revenues, but also gives it a large presence in a very attractive market, that is Europe, which is also trying to shift focus towards renewable energies, specifically solar energy. So I think from a demand perspective, the long-term story has not really has not really gone away. But in the near term, yes, the pain point from the margin perspective and from high competitive intensity will continue at least for a next couple of quarters, Santo.
Well, there's also the valuations part, as Moneycontrol Pro analyst Sachin Pal has pointed out in his latest note on the stock. What he basically said is that, this maybe the longer term story is intact, and on declines maybe one could look at accumulating it, but there's also the valuations part, which is about 36 times 1 year forward earnings, which is fairly stiff. So these price also doesn't really actually lend much comfort to investors.
Yeah, possibly at this point of time, maybe those sort of valuations may look a little expensive to the to the investors at this given the sort of decline in EPS that we have been seeing for the past 3 quarters. But yeah, I mean, it depends on one's investment horizon. If you're a 12 to 24 month investor, then maybe perhaps these valuations are expensive. But if you're a longer term investor, maybe you might just look past those sort of valuation. Moving on, the first stock on my radar today is from the information technology space. Of course, 2022 has been a dreadful year as far as IT companies are concerned, and Nifty IT index is down about 25% and is headed towards its worst yearly performance or annual performance since 2008. That is when the global financial crisis, turned the entire global economy upside down. Now, if you look at the entire IT space, the stock that has taken the most beating within that is Wipro, which has fallen about 45% on a year-to-date basis so far in 2022. Now, my argument is that probably among all the major IT companies, Wipro is the only stock at this point of time which actually has fully priced in all the negatives, Santo, with respect to a US recession, a European recession, and an overall slowdown in revenue growth profile going ahead in FY24. But the point here is that if you look at some of the verticals that will be most stressed from a global economic slowdown, that will be telecom, technology, as well as media. Now, Wipro's exposure to these verticals within the IT space is actually the least among all the major IT companies, and therefore the argument beckons that possibly Wipro will be able to weather the coming storm in the IT space, because remember, Credit Suisse last week warned that we are nowhere close to the derating in the IT sector. So if there is more selling to come, I think Wipro going ahead probably could actually outperform the IT pack instead of underperforming the IT pack. Clearly, as I mentioned, the valuation correction that we have seen will limit the downside on the stock. Also, JM Financial, is of the opinion that the new CEO theory report under the chairmanship of Rishad Premji, they are clearly going about their business in a very well-mannered way. They really know what they're doing. They're putting in place all the structural, pieces to ensure that Wipro becomes a large deal, bandwagon in that sense, and the long-term growth trajectory for the company continues going ahead. So JM Financial therefore is actually, when it's initiated the coverage on this sector last week, Wipro was the only stock that they gave a buy rating on, even ahead of a company like Infosys, which, by the way, has taken probably the second least downtick in 2022. So going ahead, I think there could be a case that you could see Wipro surprising the rest of the market, whereas other IT stocks may keep falling down in the coming year.
Well, interesting price movement there in the case of Wipro. Just as early as Jan this year, the market was somehow getting a feeling that probably the worst is over and finally there is light at the end of the tunnel. But once the correction set in, you've seen that clearly Wipro has fallen the most compared to its other peer group. So again, if you look at it, CJ, I am going purely by price action also here. In that sense, the way the stock has been underperforming clearly reflects the lack of market conviction in the stock. In fact, bargain hunters seem to be a little worried, again given the background, given the kind of highs that Wipro saw in 2000. It took many years for the stock to come back anywhere. It's been lagging frontliners for a long time, and the so-called recovery again seemed to be very short-lived. Briefly, it did outperform those peer group for a while, but again it has fallen back. So this argument that probably in case if the market, if the recession in US does take hold and IT stocks take a beating because of Wipro's exposure to some of the less stressed verticals, the fall might be lower. It really doesn't again make a compelling reason to buy afresh into Wipro at this point, unless you're holding the shares. Maybe there's some kind of relief that
Possibly.
maybe the stocks won't fall so much. But does it make sense to get into a sector like IT, which has been underperforming for quite some time and which seems to be the most vulnerable? Already we are seeing the problems in Europe and US also. It's a debate as to how deep or shallow the recession will be. It's not really the question of whether there will be a recession or not. So the things don't really look very well, augur well for IT stocks at this point in time, and I think I would rather give the entire pack a miss at this stage.
I think, Santo, for Wipro, I think it is more a call on the management than on the the entire macroeconomic scenario, because Wipro time and again has tried to reduce that gap between say larger peers like TCS and Infosys in terms of revenue growth, and it was successful in 2020, 2021. It was largely successful in closing that gap, especially since the induction of Thierry Delaporte as the CEO of the company. You have seen massive changes, and even analysts who for many years have remained quite skeptical of Wipro's strategy, even they had started to come around. So I think the entire bet on Wipro at this point of time is actually a bet on the company's management, not so much on the macroeconomic scenario. And also, if you look at IT companies, they're a funny sector in the sense that their 1 year underperformance is quite large, sometimes, but then you will see 5 years of outperformance to the market. And if you look at the IT sector, if you have held IT stocks for the past 20 years, it is very rare. I mean, your bet would have to go really wrong for you to not make money in the IT space, because it's a cash generating machine. It has always remained a cash generating machine, and even if you may not see meaningful capital appreciation, you always make some money back through buybacks and dividends. So I think for people, this sector could be those sort of sectors where you start to look contrarian into the market, because going ahead, I think stock picking will become very essential in terms of outperforming the benchmark indices.
Well, and moving on to our next stock, which is Engineers India. Again, good action in the stock recently. The stock has almost rallied close to over 40% from its recent low of 55 rupees. But even at this point, clearly there are two things which are working well for Engineers India. One is that it's a good dividend yield play. Valuations are pretty reasonable. According to Moneycontrol Pro, the stock is available at about 9.4 times 1 year forward earnings, which should give some comfort there. The most important part is that the biggest challenge for the company so far has been the pace of execution, which had suffered quite a bit in the last couple of years, which had led to the drag on earnings, and now that seems to be slowly changing a bit. There were signs of it in the second quarter. Overall growth in revenues, which was about 21% year on year, was the highest in almost 4 years. The turnkey projects division, the revenues there rose about 47% year on year. So this all clearly shows that the company finally seems to be getting its act together. If you look at the order book position of Engineers India at about 8,430 crores, it's about 4 times annual revenue, so 3 times annual revenue. So that also should give good comfort. In the first half, the company bagged orders of close to about 800 crore, but the management has guided for overall order wins of close to about 4,000 crore for the year as a whole, because many of the contracts which were on hold, they're slowly now being finalized one by one. So for this year, the end of the year, the overall order flow should be close to about 4,000 crore.
I think, Santo, clearly, Engineers India has been able to ride the wave of B2G stocks that we have been seeing in the market the past 9 months. Clear at this point of time, most analysts also are quite bullish on most of the business to government sort of government facing businesses in the market, largely on the view that government's own capex cycle will be very, very strong in the coming years to come, because of the plans around the national infrastructure projects, a lot of the golden quadrilateral projects that have been doing. So almost in every sector, it seems like the government is going to spend quite heavily, and therefore a lot of investors are quite bullish on this space. That said, I think given the sort of performance that we have been seeing from a technical standpoint, it just looks like the stock is nearing some bit of exhaustion. If you look at the past week's performance, it has underperformed just in line with the broader market. So therefore, I think it seems to me at this point of time, the stock is little too aligned with what the broader market performance is. And if we are seeing a little bit of cooling off of sentiment on the broader market, then you could see the same on Engineers India. But yeah, from a near-term perspective, clearly, as far as earnings are concerned, as far as execution are concerned, we are seeing signs of revival. Whether it could be a long-term play, that is anybody's guess, because we all know that PSU companies tend to have a track record of disappointing time and again. At this point of time, clearly it's riding the capex and the infra boom that we are seeing in the market. But whether that sustains for a long period of time, I think that remains, the jury remains out on that. So for me, I think this is a good tactical play. Play it as long as you can, but probably time your exit quite crucially. Second stock on my radar today is again from the IT space. Now this is a counter argument to Wipro. I talked about the stock probably which could remain quite resilient to a possible upcoming sell-off in the IT space. But one company which may not be resilient and may actually see the worst of that hit could be Tech Mahindra, and that is the argument also coming out from some analysts, because when I said that Wipro has lesser exposure to Santo, to telecom, media, and say for example technology, Tech Mahindra on the other hand has the highest exposure, especially telecom, which almost accounts for 40% of the company's revenue. Now these three verticals account for almost 52% of Tech Mahindra's sales at this point of time. And within the telecommunications vertical, economic uncertainties tend to delay projects from a lot of telecom operators, and with the biggest play of course for Tech Mahindra has been the 5G rollout all over the globe. Now with a possible recession in the US, a possible recession in Eurozone, as well as a possible slowdown in the Indian economy as well in FY24, you could see some of those 5G rollouts being delayed going ahead, and that could be a little bit of a bummer as far as Tech Mahindra is concerned. That said, some will argue, of course, that if Wipro has fallen 45% and it is a contrarian bet, how come Tech Mahindra, which has fallen 42%, is not a contrarian bet, right? But if you look at Tech Mahindra's valuation, they have actually not corrected as much, especially if you look at FY24 revenue estimates for Tech Mahindra. They are still quite considerably high compared to where say for example a Wipro is. So I think going ahead, the view coming out from a lot of analysts including JM Financial is that the scope for correction on earnings expectation for Tech Mahindra at this point of time is much higher, and therefore this could be one stock that could take a good amount of beating in 2023.
Well, fair enough points there, and I continue to be bearish on the IT sector as a whole. So in this case, I will support the arguments that you have made. And with that, let's take a quick check on the markets. Overall, bears still continue to be in control, and it looks like we are headed for a weak close today.
Yes, Santo, I think if you look at the market overall at this point of time, there are a little bit of, there is some bit of, signs of recovery in the broader market. I think if you look at the Nifty mid cap and the Nifty small cap 100 index, I think there you could see some bit of recovery happening. Actually, now that recovery has also given space. So when we had went online, I think we were still in the green territory, but the Nifty mid cap now firmly in the down in 0.4%, and Nifty small cap index also down about 1.1%. So clearly it seems like it is a broad-based day of selling in the market, and at this point of time it is a continuation of the sort of selling that we had seen in the last couple of hours on Friday as well.
Well, and with that, what do we keep an eye out for tomorrow, CJ?
Well, Santo, of course, today major data points coming out at home. You have the IIP data for the month of October, as well as the CPI inflation data for the month of November coming out later in the evening. Both of those data points should be out by 5:30 p.m. This evening. Apart from that, tomorrow morning you have around afternoon you will have the German November CPI inflation data coming out, and later in the evening you will have the US November CPI inflation coming out. Of course, remember the US CPI inflation data will be the last data point comes out before the US Federal Reserve's monetary policy meeting outcome on Wednesday evening. So it will be probably a market moving data point as far as the global markets are concerned.
Well, but the overall approach or attitude of the bulls just seems to reflect that once inflation starts coming off, then you won the battle.
Yeah, at this point of time, yeah, that seems to be, it's a battle against the Fed at this point of time. The market, when we were hitting the record highs, and you were also seeing the revival in the US markets as well, the market was betting for a rate cut by November and a possible pause in rate hikes by March. But clearly, I think that point of view is also changing because the Fed is not willing to relent at this point of time.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching and also sending in your feedback.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.